those shareholders. So I'm just going through all those questions received from the case, Mr. Keshav. He asked for the outline for top line and bottom line outlook for the future from 26 onwards. So since we are the part of the SEBI, and the SEBI guideline, we can't share any futuristic data, which is prohibited under the Protection of Insider Trading Act of SEBI. Your question for the Baroda plant. So Baroda plant, the area is approximately 450,000 square feet, which meant for sales. We are in a process and looking for area is approximately 450,000 square feet, which meant for sale process, looking for sale out. Domestic, in terms of the domestic market, we are having 20% market share. And if you talk your question, the decreasing in the sales versus last year, as well as the increasing of the sales incentive cards. So if we talk about the growth, decrease in the top line, so in actual there is no decrease. The top line has increased by 3%, but in last year we have one-time special order that coming from the Election Commission, which contribute 8% of total revenue of FY24. Right. So that is the reason it seems that there is a degrowth, and also there is another reason which also reflect in the top line as well as the sales promotion expense part. Basically, this year, auditor regrouped as per the Indian accounting standard from the freight subsidy or reimbursement to the stockist. They consider as a sales expense and they treat it and reclassify the same. If you see in the financial, our transportation expense has dropped because that shift from the transportation expense to the salesman incentive. In terms of the traded goods, yes, you asked for the degrowth. Again, I'm saying that we have the last year special order ECL. Because of that, traded goods has shown some decline, but in actual, there's an increase of 2%. If you talk about the ECL, the overall contribution of ECL sale is last year is approximately 8%. In terms of the discount and premium as compared to the product of Eveready and Nico, so our presence in the pan-India basis, and we are offering all the schemes and all the promotional items. It depend upon the market, stock case, competition, everything. So it's not a model; it's flexible as per the market requirement. In terms of the presence of Panasonic, we have pan-India presence. In terms of the export, we are only exporting the neighboring country of Nepal, and also we are supplying to our group company. That is, we have the export sales. In terms of the BIS and QCO on the same, so we are complying with the BIS, and there is no impact in our product and sales. Your question with regard to the R&D expense fall from 3 lakhs to 3.2 CR to 3 lakhs. Basically, if you see the financial, our R&D, we don't have a much R&D expense. Last year there's a reporting, only the annual report part, that quality testing expense treated by the quality department R&D expense, which is part of the material cost. So financial wise, there is no change, only some reporting as consider the quality testing part as an R&D expense, which we have corrected in this financial year, while annual report only. In terms of the number, profitably, there is no change. GST part, yes, we have the analog product which fall under 28% earlier, now coming back, drop down to the 18%. Now all product of the company is fall under 18%. In terms of the revenue, flat, from almost flat. So if you see that our company have, from FY20 16 to 21, there's a fall in top line and the bottom line. So we register the degrowth, but from 20 onward, we are again growing the market. If we compare from the FY14-15, so at 21 we gain a market by 2%, 22 by 6%, 23 and 16%, include the ECL order, and this year also 3%. So we are growing in terms of the top line and bottom line as well. You asked that why our OP, EBITDA has dropped from this financial year. So basically, if you see the last financial 24-25, As I mentioned, the initial 5 years is very difficult for the company which has drop in the top line and bottom line. But if you see the current financially, even our EBITDA also get increased. Now in this year, compared to FY15, EBITDA is 10%. Now is 8.5% EBITDA. So we are growing in that. And in terms of the question, the achieving the position of 24 crore EBITDA. So this year we are close 22.23 CR. So we are expecting the coming future we will touch down the 24 CR EBITDA. Lithium con battery and air battery. So there's no plan of company to manufacturing lithium and or battery. The revenue in terms of revenue percentage for Evolta, lithium coins and analogs, and the B2B business is almost 10 to 13% of operation power overall. So consumer is approximately 87% and B2B is almost 10 to 13% is the. And in terms of the traded goods, we have almost 12% to 13% is the proportion for the traded goods, including the Evolta, lithium coin and analog. Average price hike this year, so since the market is competition is very high, so there is no increase in the price. And last year as well the financial year. Product portfolio, as of now, we are looking the market opportunities and consider the futuristic market opportunity. If company need and feel that with the discussion management director to do some product, then we will definitely look for those opportunities. As of now, there's no. Amazon. Threat from the Amazon private label battery. So it's part of the competition, but battery market is still the general trade market, not a e-commerce platform markets. Capex plan. So right now we don't have any plans for major capex, but in near future, in order to meet the ever expanding market demand, we plan to start by strengthening our source process of zinc carbon batteries to enhance our capacities. Technology edge. Definitely Panasonic having advantage of the technology as well as the quality. So our main USP is the quality and technology is our company USP. Employee cost ratios, you asked that has been increasing from 11-12% to 19%. So again, there's 2-3 factors in that. One is that when the poll has started with the company, the Japanese management took over the board, which also increased the cost. And second one, the regrouping of the salesman incentive, which is part of the advertisement expense, earlier sales promotion expense, but now we are, since it is related to employee, we are regrouped to the employee cost, and the rest is due to the annual hike, which is around on an average 1 to 5%, 1 to 2%. Rate of tax, so usually companies follow 30%, but there is a special provision under section 115BAA, so the 22% plus surcharge of 10% plus 4% of education cess, so which contribute almost 25.17% of tax is applicable to the company. You ask for Jaipur and Mumbai depot building area, so it's over 600 square feet approximately. Buyback of shares, having the surplus money. Currently, company have no buyback of shares. We have no plan to buy back. We are focusing on to enhance our business, consider the increase in future market demand, and we are keeping that investment. We are focusing on to enhance our business, consider the increase in future market, which also giving the interest, bank interest, without losing and the shareholders' money. Listed in NSE, so we are not fall under the criteria of the NSE. Employee strength, so we have approximately 700 employee strength. So I believe I covered all of your questions, and if anything left, you can ask.
Sir, so thank you very much for those detailed answers. Sir, only few things got left. Sir, firstly about the outlook of FY26 current financial year, sir, since this is a shareholders meeting, this is exactly the forum, sir. There is no price sensitive information among shareholders. So you can openly tell whatever the plans are or whatever, even in broadly or percentage terms, that sir, you think that 10% revenue growth is possible. Can we surpass 300 crore top line this year? and sir, our EBITDA margins are in low single digit, around 6%. So can we reach around 10% EBITDA level?
So as I mentioned, sir, in FY 24-25, we reached the EBITDA of 8.5%. So
Sir,
you are, yes, comparing the
yes, sir.
Q1 result, which is fluctuating, the Q1 is little lower sales, so it's growing during Diwali season and the Q4. So cumulative, we are expecting that we are growing in the EBITDA percentage also.
So,
And for
so
the
in first quarter, our EBITDA halved from 5.3 crore last year to 2.2 crore this year, first quarter. So what was the reason for that?
for definitely the increasing the market price and also, the Trump impact in terms of the effects impact are there. But we are hoping to be optimize the cost. We look for the optimization from every aspect and also increasing the product portfolio.
Great, sir. And sir, one thing, sir, so what is our capacity utilization? Sir, approximately how much can we, if we operate at full capacity utilization, then what can be the revenue?
As of now, sir, we are 100% utilizing our capacity as of now. So, and there is no spare capacity available. That's why we are mentioning that in future, when the demand increases, we plan for the capex as well.
Sir, so we can't import duty free from Thailand from our group companies going forward?
As of now, we are the dry batteries industry, manufacturing industry, which contribute 85 to 87%. We already having our own manufacturing facility. So rather than importing, because again importing is the costlier affair as compared to the producing over here. So we will focus to be enhance the capacity rather than the importing for dry battery, manganese battery itself. But for other other product like lithium, analope and alkaline batteries, we definitely consider our group companies, procuring from the group companies.
Great, sir. Sir,
Thank you.
so final thing, sir. So 300 crore top line, when you think we can surpass?
300, because if you see the battery industries, the CAGR is only 1% for dry battery industry. So we are looking forward to enhance our growth in terms of the alkaline batteries, since the market is growing from alkaline premium batteries, and most we are focusing on the urbanization, focusing on the urban market. So right now we are mostly the economic range. Now we are targeting for premium, and I believe in the coming years we can achieve those top line 300 crores. Even last year we achieved with the special order almost.
Sir, so one last question, sir. How big is our land in our Indore plant, Pithampur plant?
It is almost, in terms of 121 k square meter, approximately 120.
120 square meters.
Yes, sir.
Okay, sir. Thank you very much and best of luck to you and best wishes. Thank you very much for detailed answers.
Thank you, Jesus. It's really helpful and appreciate from yours. Thank you.